challenges with China and China buying soybeans, etc. I think the thing for us to think about, especially for those of you in the feeding side of things, is that the last, 2004, 2025, likely 2026, you could even maybe argue 2023, were all years where the US was at or below cost of production, and at least on average. And that has been something that has resulted in a slight tempering of acres, and that normally would result in reduced production. But we've seen this year corn, soybeans, record yields, almost record yields every year, it seems. And so there hasn't been a whole lot of upward push when it comes to feed prices, at least as far as coming out of the US market and having a short market like we have seen in past years. And if you look at on the right-hand graph where we saw corn at 645, for example, with the 2022 crop year. And so from a feeding perspective, this is a reasonably good position to be in. You're sure you'd always like the feed to be cheaper. There's going to be ups and downs here, as we go into the spring and where we see plantings going, etc. But from a supply point of view and a demand point of view, there isn't really a whole lot pointing out that we would see major increases in grain prices coming over the next number of months to the next year. So that's good, I think, again, from a feeding perspective. Tomorrow morning, I'm doing a presentation to the grain and oilseed guys talking about them specifically. And so it's the opposite spin, really, from their point of view. But from a feeding point of view, that's particularly important. The other thing I would mention is that the U.S. Is talking about, they've announced that they're going to put out between 13 and $12 billion, $11 billion of which will go to mostly row crops, which for them is a much bigger list than what our group would be: corn, soybeans, and wheat. They're getting into sorghum and a number of other things, sugarcane, that kind of stuff. But pretty substantial payments in particular to corn, soybeans, and wheat. And that has, especially in a period like we're seeing right now, where the US, as I mentioned, is below cost of production, kind of on an average basis. In their market, when they're being a price setter like they are, when you start dumping out that kind of money to individual farmers on a per acre basis, it has a big mitigating impact on the kind of decisions that a country like the US has to have, which is we need to rationalize what we're paying for land. We need to rationalize our input use, in particular, trying to pull fertilizer prices down in terms of the demand that they have. Might even have to rationalize acres depending on sort of where that goes. This dump of money that is coming here probably into the early new year for the 25 crop, which is being sold right now, from that perspective, doesn't bode well for basically seeing prices and those commodities go up. So that's good, again, if you're in the feeding side of things. Again, if you're somebody growing these crops to sell as a cash crop, that can be a challenge, and we'll talk more about that later. In terms of looking at where sort of the supply side of things might look as we go through the winter months and into the spring, again, obviously we're in December, we're close to Christmas, but it's not that far. In some parts of the U.S. away from planting season, they have a large number of their states that have livestock outside all year long, as you guys are well aware in the South. And so drought conditions right now are a more important thing to think about than they are maybe in the Canadian context, certainly as the winter goes on. And as of right now, they're in the neighborhood of about 35% of their corn and soybean areas in drought or severe drought, 45% of their winter wheat areas again. So, those are not insignificant numbers looking into next spring. Again, that can affect plantings, etc. It doesn't change some of those other factors that sort of come into that. From a livestock point of view, about 35% of their areas are in drought, whether that's cattle, their sheep areas, relatively similar, their hay areas. And so that's actually, from the last number of years, a relatively low number. If you go back to 2012, that number was about 60% when we were in that severe drought. And that can have a big impact throughout, the winter into the spring from a U.S. perspective in terms of livestock coming either into the feeding systems in their market sooner than they otherwise would. So cattle coming off winter pasture and being thrown into a feedlot lighter, or whether or not you have cows that maybe can't be maintained whether you have ewes, etc. So that percentage again bodes reasonably well for the idea that there's enough moisture to sustain the pasture and winter grazing model, which they use and get you through to the spring without having major movements as far as volumes coming into the feeding or the meat system. Um, so the U.S. flock again, like ours, is in basically a long-term decline. It's been relatively flat the last couple of years, but that decline is long and sustained. The grazing industry's beef is similar. Are in a situation where again the ability to maintain the flock is relatively limited, and I'll talk a little bit more about that in a second. There isn't necessarily a major defined cycle in lambs, and to the degree there is, say in cattle or in hogs. A lot of the seasonality within the lamb industry tends to be within the grazing period, off pasture, etc. So, for the most part, I think from thinking about what the US is doing and how that drives and how it might arbitrage prices here, which I'll get into more. There's nothing suggesting that they're going to see a major increase in their production of lambs anytime soon. And so again, that bodes well for us in the context of the strength in market prices that may play into our market and how that can be then a benefit to us from an industry point of view. So this provides the USDA's outlook. They haven't updated one. Normally they do them once a month, but because of what's been going on in Trump land, they've kind of had some delays in a bunch of things, and so they haven't released one for October, November, or even December yet. I'm not 100% sure when they're going to release the next one. I assume by their Outlook conference in February, but this is the most recent one. I don't know that it would have changed a whole lot. But this shows basically the dark bar shows quarterly production in the US 2003, 4, 25, and then 2026 projected. Um, and then the annual average. And production going up slightly, again, coming down in 2026. Again, their total production growing just a little bit, largely due to larger lambs, etc., much like the cattle or the hog industries where we're feeding out heavier livestock. That's tended to be the case in the US when it comes to lambs as well. And then you look at the prices there again with that sort of volatility ranging $40 to $20 depending on the year on a hundredweight. Again, that's sort of your seasonality over that quarterly period. But for the most part, they're expecting flat prices through the next year, year and a half, because again, production is relatively flat. So again, combine that with relatively reasonable feed costs, etc., and it's not a bad position to be in. Again, recognizing that for the most part, there isn't anything that would see major increases in production and thus pushing prices on the downward side. So, looking into our data again, Canadian retail demand for meat overall is growing. Again, lean protein is growing quite significantly. The various demographics, certainly within the GTA, the demand for halal product is growing. As for those of you that were at the Sheep Farmers Policy Day or have seen some of the discussions recently about the Parkhill meat expansion into a federal system, etc. All of those things, again, I think from a demand perspective, bode quite well for the sheep industry in Ontario and the demand for lambs. It gets a little tricky when you start trying to talk about per capita consumption. Per capita is a complicated number. It's more of a calculation than it is a measurement. So again, that's also one of the things I think that's important to think about. But in 2024, we saw lamb per capita demand fall about 1.8%. It's been growing on average about 2% a year over the last 5 years. The numbers this year would suggest that it's up just a little bit. And again, I'll talk more about what that means and the opportunities it presents. But again, the combination of, for the most part, even if your per capita demand is like flat, it's not growing but not declining significantly. Given population growth, given the fact that we import a lot, which I'll go through, and given the fact that we have very specific groups looking for this product in a way that is maybe quite unique, I think, relative to the other major meats, in particular pork, beef, or chicken. Again, I think that goes well to the industry in terms of that potential for demand. And again, sort of finding your way within that to me continues to be a pretty significant thing. I don't need to tell anybody on this call or anybody that works in the industry that imports of lamb and mutton are really a key part of our supply chain. That's true of the US as well. We simply don't produce enough. And so again, I think again at the margins, this concept of we import a lot means there's always an opportunity for us at a firm or business level or a farm level to be able to try to displace imports. And it comes in a variety of different ways. For the beef guys, we had a Carcass 101 meeting this past Saturday at the University of Guelph about selling meat direct to consumer. Had a whole day on it. There's a number of us presented farmers who do it. I presented on the economics of it and talked about it how we do it with our farm. And again, I think there's a lot of things that apply very directly to the lamb industry in this regard. And a lot of that opportunity comes back to this slide in many respects. In that, again, because we're importing, there's always that opportunity. It's hard to sit here and say that we can displace massive amounts necessarily overnight with from New Zealand or Australia, but it's still part of it. And one of the things, again, that becomes a little bit, interesting about the industry, and this is where the move with Park Hill is significant, is that we import, if you do the math of it anyways, in Ontario, over 100% of our consumption. Well, why is that? Well, because we're importing internationally. And when it comes into internationally, that means it's CFIA inspected. With it being CFIA inspected in the retail industry and the wholesale industry in this country, that means then it can move into provincially. And so we'll often, and this isn't just the case for lamb, there's a bunch of other commodities that are like this, but you bring the product in, it's internationally inspected, then it can move. Whereas if it's processed, which is, we'll talk about in a second, at a provincial plant, it has to be consumed all within the province. And so this is an opportunity to the extent that if lamb can get into that national distribution system in a bigger way, it creates opportunity for more availability, more supply being pushed into some of these other areas, which while we have some coverage, it's not or relatively limited in that context. So that's an important advantage. And again, I think lamb, in my opinion, is one of the, and I've, if you've heard me do this talk, and I'm doing it, once or twice a year and have for quite a number of years for sheep farmers, it's a little bit of a broken record, but in reality, I think it's an ongoing opportunity. Again, we're a small country. We're a price-taking country. We're an importing country. And, this is true for most of the Canadian economy. It's certainly true for most of Canadian agriculture, even though I think we have a tendency to kind of overstate how big we are in that regard. And I think sometimes it's to our detriment because you need to understand where you fit so that you can figure out your best way to approach the world. And we're a small importing country, and we're facing a major low-cost producer or set of producers in New Zealand and Australia. And you could argue the same is true for the U.S. Even though the U.S. is quite large, they face significant competition from New Zealand and Australia. However, it comes with a product that is not as fresh. It's coming from a long distance. There's a lot of different differences in terms of profile, etc. But what we've seen over time is, again, this growth in volume is suggesting the growth in that overall demand. And so it's contrasting that sort of drop in our total production. And that's, again, important because it goes to this idea to the degree to which we think we might have an opportunity to offset that. And again, recognizing that when I talked about that product that's moving interprovincially through the major retailers or the wholesalers, that's New Zealand and Australian product. That's larger, maybe a bit from, again, as you can see on here, Ireland, the UK, Uruguay, or the US. But for the most part, it's Australia and New Zealand. And so the question is the degree to which Ontario product and some of those major retailers can hopefully offset some of that. What we've seen this year, and the trade data from that we get is not as available right now because of what's went on in the US. And so as of later this week, we'll have September data, which is normally we would have had October by now. The volumes basically for to the end of August, year to date, as we tend to call it, are up over 19% compared to last year in terms of volume. So that year to date on the right-hand side. And then the value is up over 40%. So again, it's reflecting the fact that there's shortages in lamb basically internationally. The demand continues to be there. We're buying the stuff because we want it. And that's playing out in those price levels. Again, if you look at our ewe flock, it's declined basically about less than 1% as of the July numbers. I tend to, when I look at herd numbers, whether it's in cattle in the ewe flock or in our sow herd, I tend to use July numbers as the guide, as opposed to the December numbers. But that's at the lowest level on record as far as the Canada numbers go. The Western flock shrank by 2% this year, and the Quebec flock grew by 2%, so offsetting a little bit. The Ontario flock grew by about 1% or just under that, and replacement lambs grew by over 2%. As heard me talk about this stuff before, again, given the nature of this kind of calculation and trying to add up the lambs or the ewes all across this country, it's not a perfect number. Obviously, nobody knows it with 100% certainty. So when you say it's a 1% change, from my perspective, that's mostly flat. But when you start saying that in this example, replacement lambs are up over 2%, when you're into, 2.5 to 3%, to me, is starting to say that, yeah, that's something that's happening. And the price levels to me would suggest that there's an interest in that. Prices, have been strong. They followed some of the seasonality. We'll talk about that, but they're at a level, I think, that for a lot of people, that the thought of replacing some of those lambs and building the ewe flock is probably a pretty palatable thing to think about. Um, this looks at Ontario slaughter of lambs in the province over the last 25 years. One of the things again about this data is it doesn't cleanly distinguish whether these are Ontario origin lambs or whether some of these would have come from Western Canada, which we know they will have. The lamb tracking system, at least at this point, doesn't easily make that distinction. But there's a few sort of key things to sort of look at. One is after we got outside of BSE, we've been basically in a pretty reasonably level state. A little bit of a cycle, it would appear, but for the most part, in and around that 300,000 number level. Virtually no federal processing at all. Even in the 2014, which is the peak year where you're, dealing with maybe 2 or 3,000. So again, the move by Park Hill is a pretty significant one, and if it can move to the numbers they're talking about, it would really start to show a dark bar on this graph again. And the optimal situation from my perspective, and I know is optimal from the sheep farmer OSF's perspective, is again growing the flock. So it's not, it's just not we're taking away from provincial plants, but we're growing the overall production level. That's pretty significant. Again, 2024, we saw about a 10% increase in slaughter numbers to about 6,200 a week. Pretty well the highest in the last 25 years, and that total, about the same as 2014, not a whole lot different, but so, pretty high numbers. If you look at the numbers year to date, which again take you to, in this example, to the end of October, they're down about 8%. The numbers in November, from rough math, haven't, even though they're not public yet, would be down a little bit more even than that. So again, this year, from my perspective, again, depending where this month, December, rolls out, my guess is that, the gain in the slaughter numbers we had last year, we're back off this year. And again, the question, ultimately becomes, is that because we had fewer births this year, more death loss, which I know is one of the key objectives to improve from the OSF's growth perspective or process, or is that because we're retaining more lambs? My guess is it's a combination of those things. But again, it goes back to this idea of, okay, well, maybe then in another year or so, we'll start to see these numbers rebound, and it's because the flock has grown. So we'll play with that by ear, but hopefully that continues to be the case. And again, I'm not sure how many of you guys are in the cattle or the crop industries, but one of the benefits of those sectors is that we as a price taker to the US can use the futures markets that they have as a way to look at where prices are going, project, hedge, try to deal with risk, etc. We don't have that in the lamb industry. We don't have it in the goat industry or some of our other key sectors. But there are things we can do to try to sort of understand where the US is going and how that works relative to our market. And again, the concept there is that when you have open and free trade, which we do, even though maybe there isn't a major volume of it, certainly from a live perspective, there is this process of arbitrage, which keeps prices in balance. And for the most part, it works reasonably well, and you can sort of see similarities in pricing as time goes by. There is some changes with respect to the U.S. They've moved from more of an auction, a pure auction system like we have, to one where a fair bit of their pricing is in a negotiated setting. So, moved a little closer to maybe some of the things that Park Hill wants to try to do. So it isn't quite the same, but it's sort of transitioned as time goes by. And again, it's maybe something our sector will approach. Um, but there are periods in time, and certainly in the last 10 years or so, it seems that the price changes in the US, so that's basically from the middle of this graph to the right, are a little bit closer. And if you run, regressions, as economists often do, statisticians often do, or even just trying to look at the correlations between the numbers, the correlations are stronger in the last 10 years or so, between that Ontario price and the Ontario price and the lamb price in the US. And so, from that, like we do with futures markets, we can track the differences between these two, and we can use them as a guide to help us maybe understand what we might see or expect from our market. We tend to call that basis, kind of the split or the spread between two market prices. And as you can see, there's been some interest, despite that sort of closer tracking, there's been a few movements that look a little wonky. And so if you look at even the most recent period in 2025 on the right-hand side of this graph, the dark blue line jumps up to almost 500 for a period here in the start of 2025. And the US didn't see that same jump. It's been a bit lagged, and that's one of the things we've seen a little bit. And again, I think that goes to this idea of we're auctioned, they're negotiated. So there's a different sort of process in terms of price setting when that happens. And as well, oftentimes the auctions, if you've heard me talk, have a bit of a pulse, if you will, where your heart rate's up, and they have a tendency to carry. Where negotiated pricing, it can fall pretty quickly depending on where the market goes. And so this lamb basis is represented here. And so this gives the lamb basis, so the spread between that US price and the Ontario price, for the last 2 years, 24, 25, the darkest blue line being 2025, the dotted blue line being the last 5-year average. So that's 2023 to back 5 years. And again, one of the key things here is that seasonality that kind of drives around the period in which we're putting lambs into the grazing period effectively, and then sort of back out. And again, recognizing that our grazing system in Canada is, generally speaking, more contained to the winter months than what the US is. Again, depends a little bit on where you are in the States, obviously, but in aggregate, we're farther along that line. What we've seen in 2025, again on the dark blue line, which we have data right through to November now, is that for the most part, for the first half of the year, we exceeded that sort of normal historical average, or that spread, by a long shot. And again, going back to that earlier graph, that reflects in that big jump. Why? Well, what it tends to be is when you see a strengthening in basis in this context, and where we're above zero, which tends to mean we're on an import basis, so we're higher than that other market. We're shorter, which tends to be that suggestion. What this is suggesting is that, again, either some combination of high demand or relatively tight supply would tend to push that number way up, certainly above average and certainly above last year. And what we saw is that we approached the late summer and into the fall, and now into this season that we normally have, where lambs have been sold and are going back into feeding systems, or basically into an overwintering system. We're back to that average. So something has changed in terms of the buying industry, which again in Ontario is almost all by auction. is almost all by live buyers as far as slaughter is concerned. They're feeling that supplies are getting closer to normal. And as a result, they're in a position where they're not bidding way above that historical average like they were leading into August of this year. So one of the key wild cards going into December and then into January, if you were to then overlay a 2026 number over this slide, is whether or not the dark line there, that basis, does it come into January if you're bringing it through on the left-hand side? Does it come in around the 100 to 125, which would be the average, or does it suddenly jump back up? After our sales, after people have started to look at where things are at, does the industry start going, I'm not sure there's the number of lambs around that I thought there was. Do I need to really bid high for these lambs? And does that play into that through that year? Again, some of that's, again, seasonality. Some of it's the timing going into the Easter period, that kind of stuff. But again, that's the thing that I'll be watching for, and hopefully you guys will be watching for too. And you'll see this um, in the data as it goes. Um, Again, the tracking of lamb prices is not a simple one. There isn't great data. Certainly, Stats Canada doesn't provide or track lamb prices the way that they might for other commodities, and some of that has to do with the challenge in being able to distinguish between Canadian or New Zealand, Australia lamb, etc. So we've been tracking for quite a number of years this kind of thing, basically using retail websites for various grocery stores. Again, this is not particularly profound. Any one of you on this call tonight can do it. And again, that was one of the things we talked about at the Carcass 101 this past weekend in Guelph. And again, we were talking beef, but it's similar from the lamb perspective, or anybody selling meat is that, know your local market, and you can track local stores, retailers, other farmers that are doing things. And that's effectively what we've been doing here. And so we have the darkest line, which is kind of in the middle here. That's New Zealand frozen, and that's on a per kilogram basis. And so it's kind of, it's been kind of stepwise moving up over time. And if you take that back and look at New Zealand import data and put a price to that out of the data, it follows that pretty closely. The Australian fresh number, which is again per kilogram, follows that number, stays a little bit below it. And in recent periods, this last year and a half or so, has been quite a spread below and has kind of come back up a little bit in recent months. And then the Ontario fresh number started fairly consistent with that New Zealand frozen, and has kind of been in a step increase as time has went by, as you effectively follow that sort of period where we've seen lamb prices in Ontario go up. Again, recognizing that, again, these are all taken from retail chains, which are across Canada. So they have their own distribution networks. And so again, in that context, the Ontario product that's in these stores is not product that is being moved outside of Ontario. So if it's Ontario fresh, it's Ontario fresh. It's not being sold in Quebec. It's not being sold in Manitoba. That may change with introduction of Park Hill, or if other federal packers happen to come online at a point. And so that's an interesting thing to think about what that means here. So they're trying to stay within the competitive sphere of these other competing products. And you see this if you look across the meat complex: beef, pork, chicken. If you take and again, use an example, the price of fed cattle in Ontario since 2000, basically since just before COVID, has increased 120%. And everybody's talking about how high beef prices are. Retail beef prices in Ontario have risen 54%. And so the key thing to remember about that, and this applies here, I think, with lamb as well, is that, the high increase in farm level prices, which we've seen, isn't necessarily going to translate dollar for dollar percentage wise all the way through as far as the retail value chain goes. And one of the reasons is that we're competing with imports and we're competing with other proteins. And so the grocers have a tendency to try to contain that price relative to those other competing products and those other competing meats. And so that's something to think about. And so again, if you're looking at what this might mean for you as an individual producer. Again, knowing your costs and being able to relate that back is pretty important. But again, recognizing here that for a relatively sustained period, the price of lamb in Ontario, basically going all the way back to the middle of 2022, has stayed reasonably close at these select chains. Now, again, if we were to have a more fulsome analysis, et cetera, my guess is it would be a lot more volatile. May not change the level necessarily. But it goes to this idea of there's a lot more to the retail pricing of product than just the cost and what farmers received. So in terms of looking forward, if you look at where the USDA is suggesting things are going, and if you look at the basis levels, what we would see at least on average, that basically that sort of average basis is the lighter blue line here. So the data that it would suggest is, the first quarter of 2026, we would average in the neighborhood of $400, a hundredweight basically, and then falling down to, basically sort of normal seasonality to, in the neighborhood of 350, hitting a low, which again is sort of a normal low Q3, late summer, early fall, around 300, then kind of back up to that 400 to the end of the year. So that's your average. If the current basis level continues, we'd see, some level above that, but not a whole lot. And the reason that's significant, I think, again, goes back to my earlier point, that this last number of months, we've seen the basis in Ontario come sort of back down to normal levels. And so again, that's kind of unique. As I mentioned, if you looked at the start of last year, that basis was quite wide. It was really high. And if we were to see that rebound, that dark line I'm showing here moves up by a magnitude of 50 to almost 100, depending on sort of the timing. So again, I'm hoping I made a liar in this regard, and I'm hoping that the dark blue line, as far as producers are concerned, moves that number higher. It's going to reflect, if that is the case, demand, but more specifically, not a whole lot of available supply, or not enough available supply. And again, I think that would be, we're kind of in that predicament anyways, even if, the flock is not growing significantly, if at all. And if you then layer in, again, some level of retention, that's the kind of thing that can maybe move that blue line, that dark blue line up. But again, there is limits to what processors can pay, because again, going back to that earlier slide about the dynamic of what exactly they're charging for retail lamb now, how much more can they really drive the price, et cetera. So again, I think it's a relatively positive scenario here. But again, it's going to depend on some of those features. But again, I think from a sort of a normal or longer term scenario, this is a relatively stable outlook as far as prices are concerned. And then the last point, and again, we emphasize this pretty heavily at Carcass 101. I think everybody on the call here probably knows this, but I can't emphasize it enough. Know your own costs, and especially in grazing-based industries, those are, there's no such thing as average, right? Everybody's got something different, something going on, and the better you understand your own numbers, the better off you will be in so many different ways. And that usually ties into, to really understand your numbers, you gotta really understand your production. And if you understand your production, you can affect your production, you can manage your production. But the number I use, again, I know a lot of people can sometimes hang on things I have to say, and in this example, I wouldn't hang necessarily on this. This is a number I use as a reference, and I'm, arguably in this just enough to be dangerous, I think, at times. But I use about $175 as the cost per lamb. Again, that's what's left. Once you cover that, after you sell the lamb, you take $175 off to cover your breeding stock, your feed, all that kind of stuff, your cost of grazing. What's left is the overhead on the farm and my land costs, and if I'm going to have any kind of return to me as a producer. But again, that's my guide. And again, I'm not in it enough, and everybody's is so different. I encourage you to know that. But what this is suggesting is that these are reasonably strong returns from a historical perspective. The first quarter of the year, anywhere between 120 and 140. That leaves reasonable profit, I think, for some people in that model. If you get into the Q2, anywhere between 120 and 95. Again, seasonally, not too bad. The summer, you tighten right up, which is normal. And so that tends to be the period where you start to see people not marketing as many, et cetera. As you move back into that fall period, which again is kind of more of a natural situation coming off grass, et cetera, it starts to rebound. Those are all, especially the first and fourth quarters, pretty strong returns from a historical perspective. So again, recognizing that maybe and hopefully we're starting to see some retention. I think that, I don't know if Aaron Morgan's on here or some of the people from the OSF, but again, I think that's a really good objective they have to grow the industry. It's one of the sectors when people in high places ask to me, what are the sectors I think have the potential for growth? This is one of them. I'm not going to diminish what I think is the challenge associated with that. And for any of you on the call here, you know how difficult it is to do that. But again, from the demand perspective, it's certainly there. And again, the imports are the illustration of that. So I'm going to stop there, and I'll open it up for questions. If you want to just fire them into the chat, and we'll go through them and see what's up. Thank you.
Hey folks, if you want to just say your name in the chat and I'll call you out one by one as you post your name. You can ask your question yourself. That's fine. Anybody? Okay, Lindsay Smith has posted a question. Can you still hear me, Steve?
Yeah, I can hear you.
Okay, sorry. So she typed it. She said, let's say the US did grow their flock significantly. What impact does that have here?
Well, again, so the theory, anyways, would be that if the U.S. were to grow their flock significantly, Lindsay, that the U.S. would start to see lamb prices come down. Again, given the tightness in their market, even if they grew the flock significantly, I don't know that it really drives lamb prices down a whole lot, frankly. But that's the theory, and then that has the potential to sort of translate some downward pressure into our market. But again, that's where this concept of basis, especially when you don't have the futures market, starts to disconnect a bit. If we haven't grown our flock in that scenario, we'll still be relatively short. And that is, that it will tend to mean that basis just widens. So it doesn't necessarily mean a lower price here, but it starts to mean we disconnect a little bit more from them. So I don't see it as a major risk, frankly. And again, the likelihood there is pretty limited, I would say.
Okay, we have one from Drew. He says, thoughts on producers pushing carcass weights up similar to hogs and beef?
Yeah, so again, I think as mentioned, like the beef and hog industry have obviously like increased the size of carcasses massively. Now again, in that context, it's a little tricky, right? So the majority of cattle and hogs in this country, including Ontario, are processed by federal plants. That's number one. Number two, when it comes to cattle, we don't run on a grid. So while there are some discounts for carcass size, it's not quite to the same degree. And again, there isn't quite the disincentive there, even though we're getting to the point where cattle, I think from a lot of packers' perspective, are probably too big. Hogs run on index, et cetera, and so they've been able to keep the index strong in that industry despite the higher carcass. And so again, I think that to build on that, when you talk about lambs, one of the discussions at the policy day and some of the other things around Park Hill, or just this idea of a federal plant or the move on a grid, would be a combination of weight, conformity, back fat, et cetera. If you're grading properly, carcasses can kind of gradually move up over time. But that is a major risk if you're just having heavier lambs, but it means more cutout, more fat, something that isn't usable, et cetera. So that's why I think, again, some of the things that are being talked about at the policy day, and I don't want to try to sound like I'm, tooting the horn of the board because, obviously there's a lot of work to be done. But when you can start to have those quality factors being driven back to producers, That's where then maybe you can get into a bit heavier lamb, a little bit more profit, a little bit more meat, and but it's still the quality that the packers need to be able to have the margin, which then drives that demand back through producers. So it's there, I think, but I wouldn't say just start running heavier lambs to market if that's one of the things people were thinking.
Thanks,
Uh,
Steve. One from Robert. He says, how sophisticated are retailers in setting lamb prices for consumers? Example, one retailer setting a price of $99 for a whole leg of lamb. What are they thinking?
well, again, the retailers are in a bit of a unique situation, right? They have a cost before them, which again, in most of the retail situation is through their distribution network. So they have a margin that they want to maintain, and they have a price ratio that they want to maintain between other types and cuts of meat. So my guess is in lamb, because again, we're talking a whole leg of lamb is a little bit unique relative to saying we're going to compare that to the price of ground beef, for example. Um, you know, they're they're I don't they're sophisticated in their own scenario, but I don't know that they're sophisticated in terms of saying what's the best way to maximize that carcass, if you want to think of it that way. And a lot of producers, again, are trying to maximize the carcass value. If you're doing retail cuts, that's obviously a very tricky and again, sophisticated thing. They have the advantage, again, the retailers of they have a cost. That cost is there. They know it. They have a margin they want to maintain, and they have that price ratio. And at that point, then sometimes the numbers will seem astronomical, and that's kind of what that number would suggest. I see you in the question on Park Hill. It's up west of London, but it's it's a pretty major initiative. I don't know if there's any other
Yeah.
questions.
Do we have anyone else with a question? I have one question for you, Steve.
Sure.
Do you have any insight on the potential of import shrinking on its own without our activity? Have you ever thought about that?
Yeah, for sure. I think so. You saw in that graph I showed on the price of lamb coming in. Um, those products from New Zealand, Australia have increased quite a bit in price, right? And I think that there is, again, um, always a chance that the people who are buying lamb will get to a point where, again, it's a frozen product. It's from, so far away, and they might move to some other kind of protein. Now, again, that may not always be buying Ontario lamb. It could be they move to Ontario beef. It could be chicken, turkey. Again, a lot of that demographic isn't necessarily moving to pork, right? Or they might even go plant-based proteins, which is another, always a reality, or even eggs, I guess. But that's a possibility, and it would be a price point I think that would have to sort of drive that. And again, the thing about that that's unique is that if that trend were to occur, the retailers see that the retailers start not offering as much. Then it becomes a self-fulfilling prophecy effectively, right? That is one of the differences about this international import model, right? Is that the major retailers in this country are importing based on what they think is coming from a demand perspective, and then they're putting the product out there. And so if they start thinking that it's not coming, then they stop importing or not importing as much. It's a different model than the provincial or even the local distribution model that's there. So yeah, it's a possibility. I'm not going to bet on it necessarily, but it's certainly within the realm of possibility.
Thank you so much. Next question. Would you say that it's a good time to jump into sheep farming? I'm thinking about it.
Well, again, I think that agriculture in general has a lot of opportunity for people if you understand what you want from it, if you understand the business model you're trying to do. To me, there's opportunity. It's not something that you're going to get rich at quick. It's not something maybe necessarily that could even be your sole source of income, right? But I think there is opportunity there, but you need to sort of know that for yourself. And again, I think the lamb industry has some pretty strong prices right now. Demand is pretty strong. It's an industry that has a lot of good information for producers new and existing. And quite honestly, it's an industry that is, I don't want to, for those, people, I don't want to sound like it's not hard work or whatever, but it's an industry that is one where there's a lot of good benefits associated with working with livestock and kind of the nature of a grazing based model compared to some of the contained industries where you're working inside constantly, that kind of thing. So to me, there's a lot of positives. Again, it's not without risk and challenge, and it's got to be something that fits with you and your family and your lifestyle. But I think there's opportunity. I always have.
Thank you. Next question from Drew. How many lambs is Park Hill Federal hoping to kill, and how much will that cannibalize provincial killed lambs?
I'm not 100% sure on their numbers. I don't want to quote it because I don't know it off the top of my head. I did, but I kind of forget. I don't know. I don't want to say 500 or 600, but I can't 100% remember. It has the potential to cannibalize the auction market a bit, yes, depending on if they're able to do full direct contracting as they're intending to do on a grid, which will be very beneficial. And that has the potential, I think, to be even beneficial back to the auction system. But again, it has the potential, unless we grow the U flock, to reduce the numbers at auction, which again, that goes back to the OSF's objective to grow the flock. All of these things in combination fit together pretty well, I think.
From Lindsay, related to this discussion, how large can Ontario grow the flock and maintain profitable prices? Is there a tipping point on numbers versus imports?
I don't really know the answer to that question because what happens, I guess, is that the moment Ontario lamb truly becomes a commodity in sort of the international sense, that's when you start to lose that ability to sort of see those opportunities that I'm referring to. But I think again, we could grow the flock quite a bit. Yeah, it may put a bit of downward pressure on prices, but the demand is such, I think that again, if you start moving into that federal system and truly start digging into imports, which in my opinion is possible, I think it continues to offer opportunity. But again, it would take some pretty big increases in use, and that's, as we all know, is not exactly an easy thing in terms of seeing the numbers go up. Any one person on this call could see major growth in their own individual farm, but for that to reflect in the total numbers, those are some big things, and that's where again the OSF's policy objective is coming in.
Thank you, Steve.
Yeah.
Next question. American sheep industry has a call to action regarding imports of New Zealand and Australian lamb. They say their industry is being decimated by cheap imports. Isn't the U.S. industry just an example of lack of market promotion and development of lamb?
At some level, yes. Now, again, the US has this tendency, and that's why, if you remember earlier on in the presentation, I said about how Canada, in my opinion, and ag a lot of times, and people don't tend to like to hear this, but in, we don't always, in my opinion, sort of recognize our size and then know how to operate. The US has this view, and it's kind of central in what Trump is doing. They talk about American exceptionalism, right? But American agriculture, they universally, in my experience, think that they are always the least cost. So in other words, if somebody starts importing into them, then either you're screwing them somehow or there's something going wrong. And that's kind of what they've done with New Zealand and Australia. And that's inferred in that American Sheep Institute's sort of mantra, right? The reality is that Australia and New Zealand have a longer season to grow on grass. And that fits, right? That's why they're competitive. It's not because they're dumping product. We see this in other commodities. Does it mean that the Americans like us couldn't do a better job of distinguishing from it? Sure. Does it mean that we're always going to be competitive? If people say that's New Zealand lamb, this is Ontario, or this is US lamb, and it's exactly the same, then it's going to be hard for us to always compete, right? But as you point out, better promotion, better development gets us a leg up. And then when you throw in all these other things like freshness and just, especially when it comes to Canada now, this sort of increased view that we need to, step up for the country. Now, again, none of us seem to have as much of a problem with New Zealand and Australia as we do the US right now. But, and this idea of buying local, that could be a big deal. Now, again, I think Canada has done a pretty good job from my perspective of marketing land, but I think you can always do better.
Thank you, Steve. Is there any further questions from anybody? So it looks like no. So do you have anything else to say, Steve?
Nope, just wish everybody a Merry Christmas, Happy New Year, and we'll see you in 2026.
Okay, thanks so much. Thanks for coming, everybody. Have a good night, and
Take care.
we'll see you for the next speaker series in January.